Jenna, thanks for joining us today on the podcast. I really appreciate you making the time.
Thank you for having me.
Yeah, I always like to start by asking my guests a little bit about their pathway to their current point in their career, because it's usually not our childhood ambition to end up in the banking space. At least it wasn't mine. But yet here we are. So tell me a little bit about the path that has brought you to this place.
Yeah, I guess maybe I did. Maybe I was the odd man.
Well, you're the first one. The first one of all my guests.
I wasn't dreaming about being a banker by any means, but I always did, as a kind of a career marketing professional. Started my career actually very early, working 15, 16 years old in a call center. And so I always was just kind of that connoisseur of the perfect customer experience or the perfect customer engagement with, whether it's somebody that's buying a newspaper subscription or, signing up for some sort of service on the phone. So for me, I don't know, I was always really passionate about that, about making sure that when I was engaging with someone, that we did not have somebody that walked away like, oh, what was that experience that just happened? So that's really kind of, I would say, the fastest way to describe how did I get here is I worked, about 10 years ago, starting in a consumer lending organization, focusing on portfolio growth and acquisition. How do we make the biggest impact with our customer engagement? How do we retain those customers and continue growing our base of customers of really, ecstatically happy individuals with the experience that they've had? And so that's really led me here. I've only worked for a handful of organizations over the last 10 years, and it's always been focused on just growing that consumer, making sure that those, one-on-one experiences, whether it's with someone in a call center or on an email campaign or a display ad that they see, that it's very clear and conspicuous, what they're getting into and what their benefit would be.
All right. I love that story and the focus on consumers and customers and growth, which I think is so much a part of what every institution now is trying to find a way to do. But I want to dive into one of the things you said to me when we talked earlier, which was moving from bricks to clicks to bricks, which I thought was this. Everybody's got these little one-liners that I think, but they kind of capture some truth about what we're trying to do. And that was an interesting one I hadn't heard before. So, tell me a little bit about what do you mean when you say moving from bricks to clicks to bricks? How do you think about what you're trying to do in that context?
Yeah, I think, so a little bit about nbkc. We're an organization that's been around for some time, but, early on had a very heavy focus on the digital world, being a Fintech partner, bringing, and I think, from a community bank standpoint, not every community bank has their entire team of developers behind them that, are kind of owned and guided by the direction of where the bank is going. And I think that plays a huge role in, that catchphrase of clicks to bricks and bricks to clicks. And well, the majority of banks have, I guess typically over the course of history, always focused on having a brick and mortar place in their community or a brick and mortar place in their market. We recognize that that's incredibly important for a very large segment of our borrowers, that they have that relationship banking with someone who's on the corner of, First and Main. And that certainly does still play a huge part in our strategic plan. But I would say even bigger than that is that we haven't been focused on trying to drive individuals away from a brick and mortar presence over to an online presence, which I think does happen organically right now.
It's the bricks to clicks.
Yeah. Folks are kind of saying, hey, let's try to get people into our online space. And we've actually really been focused on the reverse of that, saying, we're not trying to force you into this digital place, but we're here for that. And so many of our online banking relationships and partnerships that we have, not only with businesses in our community and in our Kansas City footprint, but also with borrowers and with deposit customers, right? They actually started out as an online banking customer and are very happy to find that they can actually still go into a brick and mortar place as well.
How does that change how you think about the digital experience? I mean, it's a really fascinating kind of shift, but it means that in many ways your digital experience could be the first or the primary, where I think a lot of institutions have thought about building a digital experience as the follow on to the in-person, the current customer who's got a relationship but wants to check their balance or deposit a check or do something simple. But in this case, you're saying it may be the first or the primary interaction somebody has, which kind of changes the nature of what you need to accomplish or maybe how you think about serving that customer. I'm curious, how you see that shift, or if I'm crazy when I say that, but it seems very interesting to go from clicks to bricks. It takes somebody who came to you digitally. Now you're talking about onboarding and starting a relationship digitally and then having the in-person service, which makes a ton of sense to me. But I imagine it shifts your priorities a little bit on what you're delivering or how you think about the digital experience and the role it plays in the customer journey, because you're kind of inserting it in some ways at a different point in that journey.
I think you're absolutely right, Jeff. And the one thing that you said that could not be more important to remember for any organization that's thinking about how do we adapt in this fintech space, or in, kind of I keep saying clicks to bricks, but, in this digital revolution that I think most banks are having right now, is that does become incredibly important, that you get off on the right foot with that borrower, that they understand the support that they have from your institution, as well as the myriad of products and product offering that the bank has. So, I would never say we're in a time and place where it's not important to be focusing on that digital interaction, but us starting that and also having that as a primary communication source means that, we always have to get off on the right foot with those borrowers, and also communicate to them, right? Be very thorough in our communications as to here's what you can expect from your interaction, and here's what you can benefit from as well.
I like that. Knowing so much, I think of life as setting expectations. And so kind of understanding where to go for what, when to use A or when to use B. As long as people are actually more flexible, I think, than we often understand, as long as they have the expectations set, right? They know where they're supposed to go, what they're supposed to do. As long as you meet those expectations, that's huge. And helping them understand where and when and how to communicate with which tools can work, I think can make a big difference. I want to dive into your point on customer experience. You talked about, I think, opening up lots of, one of those people. I've got, I got a stack of cards in a drawer over here. That's all the various digital bank accounts and services. I've got one that you could use to spend Bitcoin on stuff, the credit card. And man, I bought a cup of coffee on Bitcoin in like 2014. And turns out that was a very expensive cup of coffee at the current exchange rates. But, trying out all those services, I think, is really valuable. Talk to me a little bit about how you think about the value of that, or opening up lots of accounts, and how that informs how you think about building the right customer experience for your own customers.
Absolutely. That is, it's a little bit of a passion of mine. And I would say that it takes up a fair amount of my mailbox as well. But yeah, I think, exploring what in this day and age of neobanks, banks that serve this niche of the market, I think it's fascinating. And I think it's fascinating for us to see how consumers are being spoken to, right, from the company perspective, because what that brand is trying to do when it, specific to a neobank, is talk to that borrower. But the individuals at the sponsor bank or the company that, put that card or bank account out, they're likely not in the target audience for that borrower. So I think it's fascinating to go out and look at how brands have crafted their voice, how they've crafted that experience of what it looks like online. How can you engage with the brand? That's a big one for me. I love reaching out. If I opened a package of fruit snacks for one of my kids the other day, and there was like this weird, gob of white stuff in there. And I'm sure it was just probably where coloring didn't get mixed into the fruit snacks all the way. But I love to reach out to the brand and engage with them and say, hey, I found this in our box, just to see what the customer experience is like. And I think we can bring that back to our brand to say, what is it that not only, we're talking about like ancillary industries, but our competitors, direct community banks in our market, or even online banks as well, are actually engaging with their consumer base, because I want to make sure that what we're doing at the end of the day is that we're actually giving people what they want and more. It's not about meeting the baseline expectation. It's about exceeding that expectation as well. Mm-hmm.
Yeah, that's so true. I'm curious, do you do this with your own product? One of the things that surprised me when I talk to some banking executives is like, they actually have never been through the onboarding experience for their own institution. I've got like 5,000 email accounts in Upstart systems, because I used to apply for a loan like every week. They were talking, we've changed something. I need to go like see it. And then I'd sign up for all of our competitors and go through the flow. And I'd say, hey, they do this and we don't do that. Like, why don't we do that? Or should we, so of course they all required a unique email. So I have like a bajillion versions of emails that I use for that. But I'm curious if you go through your flow, if your team goes through your flow, and if you like what you learn from that. Because to me, it's been such a valuable experience to really put yourself in the customer's shoes and understand the process from the customer's point of view, which can often get lost in the kind of internal politics and architecture diagram and checkbox of things that need to get done before. I got my BSA checklist and my AML checklist, and we do these 12 things. Well, what does it actually feel like? Right. And how does that, and I think that's what you're talking about when you talk about finding these brands and going through those experiences. And I'm curious if you do the same thing with your own, because it's so interesting to see it.
Yeah, absolutely. It is. It's so important to me. I think that's kind of one of the first things I do. I call it it's a base level. It's level 0.0 tasks. When you're actually getting either ready to launch a new product or, add a new feature, right? I think everyone's in this time and place where we're thinking about fraud and what, KYC does for our business. Obviously knowing that that's a regulatory requirement, but it's definitely something that helps fend off, if you're doing it correctly, a fair amount of loss, right? Mitigating, in some instances, millions of dollars, depending upon what your product offering is. But I do run through that. I make it a best practice of mine to do it on a desktop and a mobile device, send it to several people on our team, send it to people outside of our organization, say, hey, can you step through this, right, at the appropriate place? Hey, mom, or cousin, I need you to come in here with your device and walk through this. But just like you, I'm surprised that there's a lot, we get caught up in the day-to-day QA and, business acceptance testing on some of these digital products. And it never ceases to amaze me, some things that are very basic that sometimes get overlooked. So absolute firm requirement for me to do that. And then taking it one step further as well is session recordings seems to be a real hot trend in tech right now. The number of things I've seen on a session recording go wrong that you would never get in a testing environment is also really important, just to sit and watch, right? What are customers doing? What are they looking for? Are we answering their questions? Are they scrolling up and down on the page and reading every single word and maybe not finding what they're looking for before they abandon? So those are all things that are absolutely critical requirements.
I love that kind of other people in the session record. It's so true. Like you watch these session recordings and you're like, they're trying to make a payment. You go, oh, click that button. Why would you click that button? Why do you, no, don't, why, no, why? And then you got to learn from that, because it's, especially when you've seen the product so much, you have this intuitive understanding of what to do or how, and you're a savvy consumer of such products. Being in the industry. And then the average consumer isn't, and they haven't seen the product. And so it could be shocking what they do. And then you go, but that's great data on, we better make this more obvious what to do or where to go or how to achieve this objective that they have, because it can be stunning what you find in those recordings. When you watch people actually using your product and you go, oh, that's not what I thought you would do. Well,
absolutely.
They did. So I wanted to dive into something you said earlier, because you talked about having your own dedicated development team. Which is fascinating, because a lot of it's one of the funny things to me that this kind of idea of bank fintech partnership is considered new. And I look at just the core systems providers, and very few financial institutions really build the majority of their own software, right? And so I look at fintech partnerships and think, well, software developer providing tools to financial institutions is kind of not that new a thing. And in many ways, you're right that having your own dedicated development team that's building core user experiences is somewhat different than others. But obviously you guys are not of a scale to be building everything from scratch on your own. How do you think about where you place your bets on what's the priority for you to build versus buy, where you use the resources of a development team to add the most value? Because that feels like an almost infinite menu of things you could do, and yet a resource that clearly isn't infinite in scale. And I'm curious how you think about, where do we deploy that for the most value? How do we think about making that decision?
I think every fintech organization on the face of the planet right now faces that pinch of our resources are not unlimited when it comes to, software developers and engineers on the back end to build things. And I would even challenge the biggest of, the box fintech companies out there to say, oh, we build everything on our own. And I just don't think it's a reasonable expectation to think that any company has the subject matter expertise to go out and build 100% of their tools. And so it really boils down at the end of the day to a really great build buy analysis, as well as some, great cross-functional teamwork within your company to say, here's what we're really good at and the things that maybe we're not so good at. What makes sense for us to bring in-house. And actually we're in the process of doing this for a larger scale project right now on my team as well, of we need something to solve a particular problem that is as a result of growth and a desire to grow. With the amount of time that it's going to take, and taking up, I would say, monopolizing 2 or 3 team members for the majority of the next 6 months, we're in this process of saying, here's how we quantify what this tool costs us to build in-house. Not even to mention the learning curves that this system, which is primarily more AI, will have, versus going out and saying, okay, we found the person who's a subject matter expert in the marketplace. They're already working with vendors. They can kind of model out some statistics of what this would, in theory, look like in our environment. Which path do we want to go? And I think everyone at the table agrees that we have to leverage, again, our areas of subject matter expertise when and if it applies. And if it doesn't apply, then there's no shame in going outside of that team, because that team actually will be integral in an implementation as well.
Mm. I'm curious, one of the areas that I often think is underinvested in is the unification of the customer experience across maybe different systems or protocols or partners you've got. Because, when you talk about the kind of clicks to bricks, one of the things that occurs to me is kind of like the customer experience almost, I won't say it replaces the relationship, but it's playing the same role that we used to think of the relationship. Like the thing that brings me back, that feels like I'm dealing with an institution that understands me, really comes together in the clicks world and that customer experience. And yet so often it can be disjointed. I mean, I've told the story a couple of times, but I went through a mortgage. I got a mortgage from my bank, shall remain nameless, witness protection kind of thing. And then I said, well, can I get a HELOC at the same time? And they said, absolutely. And then I got like a different experience that asked me all the same. And I was like, that should have been just a little, like, would you like fries with that kind of question to originate a HELOC at the same time as a mortgage with a good LTV. And instead it was like an entirely new process. And I feel like those seams between the systems and processes are often places where things break down in delivering that experience. And so I'm curious how you think about that, kind of the integration and the, kind of surfacing of these things as a place to put development resources versus deeper into an individual product. Because I always think it's an area that's somewhat underinvested in by many institutions, because it just, all of the best individual experience when I went to the next HELOC thing, I stopped the process. I'm not filling out my address. I just got a mortgage. I'm not piping my address in. And that's a simple thing to fix, but it makes such a difference. So I'm curious how you think about that, kind of like the glue element, so to speak, or the consistency and unification of experiences for the customer.
Yeah, I think that's a great question, because if you can imagine this, if you step back from the 50,000 foot view, is that many times when we're developing, I say this we like universally, when we're developing a product, it is, it's going to be the best product out there. We're going to launch it. It's going to have all these features. The customers are going to love it. And then we think about implementing it, but not to your point of how do these things cross-functionally work together. And so I think that's really where leadership is a key play. At nbkc, we're very lucky in the fact that all of our chiefs and our leadership team have been around for a long time. They've worked together for 10, 15, 20 and up years. And they communicate. And so I think really, boiling down that challenge with one solution is it's communication, right? Because those departments, a lot of times when you're talking about a mortgage and a HELOC, they seem to be so, kind of similar, if you will. But at the end of the day, they probably have different internal ownerships or stake owners, or, shareholders, if you will, at the bank. And, those two people may not be talking. They may not be using the same databases and making the same queries. And so ultimately, I think in order to achieve this harmony at a brand or at a bank specifically, is it comes down to the communication of us saying, hey, we're rolling out this great product. Should we be offering it in conjunction with a mortgage? And we're doing something very similar right now, actually, with the HELOC product at nbkc, where we're talking about, customers coming in and getting a HELOC. Doesn't it make sense for them to have an online banking account so they can instantaneously transfer money versus waiting on that, check to clear or wire or ACH, to go to an external institution? We're really, not necessarily thinking about it from, a financial perspective, but this is what's best for the consumer. This is what makes the most sense to get customers access to those funds right away. Yeah,
I think that one of the hard parts of this, there's an old saying in Silicon Valley that organizations often ship their org chart, which is you get the two stakeholders and they each do their thing, and then the customer sees two separate things as opposed to a unified experience. And I find that sometimes it's that who plays the role of the consumer? How do you put, if you go back to you trying it out, like if you went through that process, you would see the gap pretty clearly. But I'm curious how you think about aligning those groups or getting everybody on the same page, because it is communication, but it's also setting up the right incentives within the organization or the right culture that prioritizes that customer's experience over that individual business units, maybe not performance, but kind of self-contained, objectives and vision. Do you have advice for how you kind of foster that kind of culture of communication, leadership, shared objectives? Because I feel like that's so often it's incentives or culture where that breaks down. Everybody believes it should be true, and yet we fail to deliver on that vision so often. How do you actually, achieve that kind of result?
I think you hit the nail on the head. It comes to culture, right? This isn't about me. This isn't about my division. This is about the bank and the bank's greater success. And I'll say this: I've worked at many organizations that have been working actively on getting there with that culture, and it doesn't happen overnight. But it has to be something that from the top down, that individuals care about the overall success, and they have to be very passionate about their customers and about that customer experience. And so I say, get every single person on board with understanding, and this goes all the way down to your, tellers at your bank and your brick and mortar locations, your CX and customer experience specialists that do, instant messaging, that do email response, phone calls, things like that, of understanding that this is a product that's coming out. This is a benefit to the customer. This is, the reason that they bank with us, right? They do it for a very specific reason, not because, they drove by our branch and just happened to walk in one day. It doesn't happen by accident, but it needs to be very intentional top down from your CEO or your bank's president to make sure that everyone knows. Again, I mentioned communication earlier. This is the benefit. This is absolutely something that we all have to be passionate about.
Yeah, and I love your story with the HELOC and the digital bank account, because so often you've got you get the mortgage. Well, we'll give you 20 basis points off if you open a checking account, and you go, okay, you got to put $100 in. You go, okay. And then you wire $100. How long do I have to leave the $100 to keep the 25 basis points? And then but that decision came from the point of view of, we want more deposits, right? So what can we do to take this person and put them into a deposit product? And what you're talking about is a version we went, hey, if you got a HELOC, you can use it more quickly if you have a digital bank account. So I'm starting not from what the bank wants to get out of it, but what's the value to the consumer, the customer? That's just such a different starting point to ask the question, how do we make the consumer's experience better? Hey, you can access your HELOC funds instantaneously, not a 3-day ACH transfer window or a whatever, but instantaneously. That's a very different mindset than the thing that results in fraud at larger institutions. We go, oh, we need more deposits. Let's just see how many accounts we can get people to open up when they're taking out a mortgage to just drive up our number of customers to hit some sales objective that gets me a bonus.
Absolutely. And that's actually one of the reasons why our nbkc Everything account, we offer a singular type of checking account, it is straight to the point. There are zero fees, no fees whatsoever. We're trying to offer this as a convenience to those customers. I've been into many financial institutions, going back to that comment about opening accounts and seeing what that's like. And they present a menu of account types, right? If you're going to have 4 or more transactions every month, that, you save this fee, or if you have 3 direct deposits, or if you have blonde hair and blue eyes, you can have this type of an account. And so really, at the end of the day, we boil it down, we make it simple. We're not going to overcomplicate this. We want you to have a simple and easy transaction that what you're getting into when you get that account.
Yeah, that's so true. I feel like we live in an age, not just in financial services, but everywhere, we offer people too many choices. And I'm so often sitting there going, I want a pair of shoes. Why are there you go to the running shoe store and there's 5,000 pairs from the same brand. And you go, I don't know, which one do I need? And often those choices are not really important for most people. You really just would prefer to have the right thing given to you and not 1,000 options presented that you don't really know how to choose among.
Absolutely.
So I wanted to talk about one more topic that came up in our earlier conversation, which was the kind of emerging use of alternative data to improve underwriting. Maybe I should ask a more specific question, but I think you had some thoughts on that, and whether that's like a real direction and what the value of that is. And then we can talk about some other stuff, but I'm curious because it's an important topic to us, but I think it's a very much an emerging trend in the space overall. What are the kind of new ways we can improve our ability to understand and predict risk?
Absolutely. I don't know that maybe it's an emerging trend. I feel like it's been around forever. I've been using alternative data for more than a decade now. I think that it has, I would say, an incredibly important place in any financial institution, regardless of what audience you're serving. You can certainly see some of the things that aren't on the radar. If you're, a traditional bank customer and you're evaluating DTI from someone, and they appear to be, I would say maybe a mid-prime or near-prime customer, don't you want the full picture of what it is that they're doing with their finances? Don't you want to know if they went down to a, rent-to-own store or to, buy now, pay later loans? I mean, those are things that are really important to look at the whole financial picture in its entirety versus just saying, here's what's traditionally reported on a bureau. So bureau data is always going to be incredibly important. The bureaus also offer this alternative data that really does bring us full picture when we're talking about, especially online lending, making quick decisions, evaluating a person's kind of financial wellness online. We need to pull those things in because we don't get to have the luxury of a one-on-one conversation with a borrower setting face-to-face in our brick and mortar branch, right? We're taking data in microseconds and evaluating, does this customer fit the credit box that I'm trying to fill? And so whether it's a business or a consumer, there's very relevant data that comes out of that alternative data that helps us understand again, bring more of that picture forward. Maybe they look like they had a thin credit file, but they performed really well on some of these alternate products. Or maybe they're a business and they've only been in business for 12 months. So I have very little kind of cash flow projections on hand. I can actually go and say, what are they doing? Are they paying their utility bills? Do they own their building? Do they rent their building? What's happening on that side of the business that you're not typically going to get out of traditional data? So that is, whether it's new or not new to you, I'm always finding new ways to pull that data in and really get this kind of robust picture of what this borrower is doing and, what the trends are.
How do you think about leveraging the data? I mean, there's this kind of like more data is better kind of an intuitive sense, right? But then there's like, what do I do with all this? In the traditional world, like a human being read these things and kind of made a judgment call if like the rent and utilities payments was, sufficient enough evidence of financial, savviness and responsibility to outweigh maybe a low credit score or a low cash flow in a business or something like this. How do I weigh those out? How do you think about in the context of microseconds and online and maybe automated decisioning, how do you think about how do we take advantage of this? In some ways, broader set of data is like more debilitating in terms of how do I make a set of rules that actually you can leverage all these things and know how to weigh things off. So I'm curious how you think about taking those things and actually making the best use of them in terms of making good credit decisions.
I think it's layering. So, your core data is always going to be key, right? You always, for certain types of lending, you're always going to want to know what that FICO is. And does this kind of fit my min-max threshold for a specific product? But it's really taking individual data attributes and laying them on top, right? So what am I looking for? What's the objective with this data? We can specifically talk about the customer that's in the, kind of buy now, pay later space as well, that's maybe made really great progress on improving their credit stance and coming up into a place where maybe I was subprime, but I'm no longer subprime, of bringing that in and saying, what are those current outstanding debts that they have? So we have a better picture of their DTI. If it's a business and we're looking at a business again that maybe has been in business for a short period of time, and we're pulling in alternative data points on what's the financial health of this business long term, there really needs to be I'm not making a definitive decision only on that data. I'm actually saying, would I take this borrower at their current FICO and with their file? If yes, then I'm going to start layering on additional parts of that data. If I wouldn't take them with their existing data, there's not going to be a ton of alternative data that's going to help you support that, except for where we're talking about a thin file. So I think you have to think of it as, instead of it being in an ice cream sundae, the scoop of ice cream, it's the sprinkles and the cherry and all the other things that come on top that make that ice cream taste better. But you could easily have it, with or without sprinkles.
All right, that's now I'm hungry. I got to go have an ice cream sundae. It's not an analogy I've heard before, but I like it. Jen, was there anything else you wanted to cover today? I feel like we've covered things, covered a lot of ground, but I've got a couple questions I always ask at the end, but I like to ask my guests if there's anything else I wanted to talk about or felt like we missed from our earlier conversations.
I don't think so. I mean, I think this really covers the majority of the things that I'm really passionate about. I think, the one thing that we did talk about, and you have to decide if this serves the audience well, is the importance of a fintech relationship at the community bank level. Is that there's a lot of fintechs out there that are just creating kind of bells and whistles. They're not really supporting an institution. I think, one of your questions on the PDF that Allison had shared was, what are some of the bold predictions or what are some of the trends that are happening? And I strongly feel passionate that in order for fintech to be wildly successful and vice versa, community banks to be wildly successful as well, is we have to find this intersection where fintech is supporting a bank in a local community where those, individuals in the community have a strong relationship with the bank. This is definitely a generational conversation because I think that there are some generations, future generations, that won't know a relationship with a community bank. But those individuals who have that strong family tie to a community and to a bank will only benefit from our actual banks having fintech legs underneath them to support them to have this online robust presence. It's challenging, right? It's challenging for community banks who have, maybe they have a smaller community around them to say, yeah, we've got an app, we've got online banking, we're competing with the larger big boxes in the marketplace, but with the fintech partnership and having those those relationships behind them, it really helps them get to that kind of I've got my technology behind me place.
If you think of that fintech and community bank partnership being so critical, how do you talked about the fintechs that support the community bank and those that are building bells and whistles or are not as focused on delivering value. How do you find the right partner? I feel like there's this kind of multi-stage thing to an effective community bank fintech partnership, which is like finding the right partner that's a good fit, which can go wrong. Doing diligence, getting implementation, and then actually like getting technically integrated, and then actually delivering value to customers. And I think these things can fall down at any step along there. You can, you find a partner that doesn't add value. You can have a partner that doesn't make it through diligence and isn't really going to support you. You have a partner that's got software that doesn't really deliver value in the end or can't get implemented. How do you think about finding the right partners and managing those relationships for success? Because I feel like it's true. I think there's a ton of opportunity for fintechs to add value to community banks and really strengthen the position of those kind of pillars of the community, quite literally. But how do you find the partners that are going to be value add that way, and those that are going to be more of a bells and whistles distraction and not a real value add? Because it doesn't seem obvious to me how you do that.
I think that's probably one of the biggest challenges that smaller or community regional banks are going to try and come up against. I never want to downplay the due diligence. I think that's one of the biggest areas where some of those flaws come out is in that due diligence. And so I would definitely encourage anyone who says, I want to bring on this cool piece of tech, and they rush past that due diligence of like, I've got to have it now. The due diligence is incredibly important. The other piece of it, and I've always had really great success with this, is really leaning into your network and leaning into your relationships with the other institutions in your area or in your region to say, how are you solving for this? This is kind of maybe an objective of our banks or, kind of a real pain point for our customers. What is it that you're doing to solve for that? And using your network and using your peers to help, kind of identify what they're doing, because it certainly isn't going to be a pain point just for you. It's largely going to be a pain point for many of your peers as well. So I think between a combination of doing the right due diligence, taking your time to find it, even though it may be something that seems, so cool that you have to get it out to market ASAP, is make sure that you walk yourself through that due diligence.
All right. I like it. Due diligence. Yeah. I will say, having worked with a lot of financial institutions at this point, I've never found any that skimped on the due diligence. It doesn't feel like the place that many skimp, at least not from the technical side. Although I think maybe the customer experience part of that is an area where, there's so much focus on just like building your product internally, the BSA, the AML, the enterprise viability for a startup. Like, these guys have enough money? Are they going to be around? Are we being compliance bars? And then there's a question of like, how do we actually turn this thing into value for our customers? It sometimes is not is not as fully vetted at the time as maybe the like technical diligence pieces can be, because those parts always have felt, I won't say overly burdensome, but never have felt like they were being skimped upon in my experience.
I think that's a good thing. I know it's kind of frustrating.
I think it's a great thing
from a partner, but there's the things that come out in the wash when you're going through those process, internally I think they're incredibly important.
And I will say for any of the fintechs listening, as someone who's been through the process a lot, I felt like it made us stronger as an institution, as an organization. Like it's kind of like going through SOX compliance, or even, to be honest, some of the preparations for an IPO. It's like they're painful, but they're good controls, they're good oversight. And you go, oh, we do need to be better on this or that or the other. And typically you're stronger for it on the other side. And it gets easier over time because the diligence processes are not that different. Everybody has their own unique question. But once you get to the place where you're ready for it and you go, hey, we're confident that we have the information you need, and we have the controls and the processes and with the good answers, then it becomes a little more straightforward to do. But if you can't do it, then you don't belong in the financial services space, in my opinion.
Definitely not. And the things that also come out on sides of, when your vendor's asking questions of how, what do you do in these scenarios, or how would you handle XYZ? And you're like, oh, man, that went straight through my heart, because we do need to be thinking about that. And so I think that challenge, both from a good vendor and a good partner, makes everybody stronger.
All right, Jen, I got 3 closing questions I ask everybody at the end of the podcast. So here we go. I actually love the answers to these. Sometimes they're my favorites. What is the best piece of career advice you've ever gotten?
If you don't like the view, keep driving.
If you don't like the view, I've never had a driving analogy for career advice. If you don't like the view,
I've got all kinds of analogies for you, Jeff. I've got the ice cream, I've got the driving. If you don't like the view, if you don't like where you're at, you don't like, the outcome of the project that you just ran, there will be another project. If you, got maybe some CSAT results back on your team and it wasn't great, go through some improvements, go through some training, because nothing is ever permanent. So just keep going.
I like it. Keep going. If you don't like the view, keep driving. All right. Second question. What's the best piece of advice you've ever gotten about the consumer banking space? It's been a number of years in consumer lending. I imagine you've gotten some good advice.
I have gotten some good advice, and I think about this one probably at least once a week. It is, don't ever assume that you are your target audience.
Oh, I love that.
We love to think about, this is what I would want. This is the way that I would talk to a customer. But it's because it comes from, your perspective and the privilege that you have. So don't assume that you're part of your audience. Oh,
I love that. And I think it's especially true in financial services, because even the savvy audience usually doesn't understand our products as well as, like before I got into this space, I'd tell you like HELOC, HELoan, credit card, debit card, charge. I didn't understand, different products. And there's so much as just underlying knowledge that you forget that you even have when you're in the business, that you bring to bear in those things. And not just like, are you in the same financial status, category? Do you have the same kind of income band? Do you have the same kind of credit score that your customer might have? But just the knowledge of the products. It's maybe an industry more than any others where there's this real gap in knowledge between the insiders and the average consumer. And it is a huge mistake, you're right, to assume that everybody is you or has your knowledge or background or desires or wants. And that is a lot of startup companies do like to they build for themselves, and there's maybe no industry where it's a bigger mistake than this one. That's a fabulous piece of advice.
Yeah, thank you very much.
All right, last question. What's one bold prediction for the future?
I think that we're going to be more and more disjointed when it comes to tech with our consumer bases. I think that businesses have gotten really comfortable with having a large amount of wallet share, especially in the financial services space, where they just expect that because someone has an auto loan or a mortgage, that's where they're going to keep their checking account. So I think that banks will need to be more proactive about keeping that wallet share, right? What do I need to do to not only earn that, but keep it? Because we're in this instant gratification. I can open an account anywhere. I can get a loan online anywhere. So I think that we're going to see a continued spread of wallet share. And like I said, I think that we're going to have to, I say we universally as banks, really have to fight for that and make sure that, we're honoring our consumers and servicing them to the levels that they expect.
I think it's such a fascinating piece of advice. And I've seen this, with the number of neobanks and the savings accounts. I mean, there's lots of the places that this happens. But I used to talk to banks about what they call the alpha and their beta, like how much their deposit base was actually sensitive to changes in interest rates. And like the big banks was like, it was zero, man. It doesn't matter what happened to interest rates. I don't pay any interest and nobody leaves. And now when there's like 15 neobanks offering me 4.4% and interest rates have risen so much in the last, 18 months that you go, 4 points is like, it's not like somebody's offering me 0.75 and you're offering me 0. Like somebody's offering me 4.5. And I think you actually seen in the latest results that the deposits are leaving some of the big banks for the first time substantially in many, many years. In that kind of sense that you have to keep earning it. And there are competitors. And what are you going to do? I think is maybe more real even to the big guys now than it has been in a long time. But let me ask the follow-up question to that, which is, how do you do that? Like, do you have advice on when you see that and go, hey, well, I've got to not only earn it once, but continually earn the right to maintain wallet share and the next product and to keep your business. What's your advice on how you actually go about achieving that? Because I think you're right. But then the question naturally is like, okay, I need to do that. But what do I do to achieve such an outcome?
Yeah, I think if you're not doing a competitive analysis on a routine basis, I challenge my team to look at this on a weekly basis. What are your direct competitors doing today? What rates are they offering? What products are they offering? What term are they offering, right? Let's get really down into the nitty gritty because I want to make sure that we're the best at what we're offering. But it goes back to what we talked about earlier, is that we have these emphatic customer interactions and engagements where we're meeting their needs. So I like to think about, competition in two different ways, right? Active and reactive. Are we being reactive when a customer says, I'm going to pull my deposit business out of your account? And then we say, okay. Well, we're going to meet the terms that you want. Are we being proactive and actively increasing our interest rate on a high yield savings or on a CD or on an auto product, right? I think that we have to look at all of those things and say, meet and exceed the bar, but also know what everyone else is doing. It seems pretty basic at a high level, but you'd be surprised at the number of people who don't know what their competitors in that market are doing.
Well, it's not a lot of transparency, like to understand like what rates are really being offered. Some of them there are, you can go like high yield savings, but like what interest rates being offered on an auto loan to a particular consumer, like people aren't publishing the rate cards. You don't really have an easy way to know that. We certainly have seen the same thing, struggling with finding the information, and it's crucial, right? Because consumers are, if anything, is driving the kind of diversification of services and relationships that customers have, is probably the simple ability to comparison shop and say, hey, I'm going to get a product. I'm going to go look and see if I can get a better rate somewhere else. And if I can, like that used to be hard to do, and it's now easy to do, and people do it. And so they know pretty quickly. And so you got to find a way to have the knowledge about what that market looks like. Otherwise, you can't compete with something if you don't know what it is. And that's just kind of the reality.
I think that also helps too when we talk about secret shopping and going out and applying for things. And I wouldn't encourage you or anyone else to go and apply for an auto loan every week, but I think you can kind of get downstream in that online application journey, or call the bank and say, hey, I'm interested in this product. What are you guys offering? And have some educated conversations.
Absolutely. Well, Jenna, this was a fascinating conversation. I think we covered a pretty wide variety of topics. Thank you again for making the time and joining us today.
Thank you so much for having me.